November 10, 2017, 11:06 a.m. EST. Hydro One Limited said Friday that its third quarter results were weighed down by costs tied to the utility's approximately $6.7 billion purchase of U.S.-based energy company Avista Corp., as well as a less-than-scorching summer. Toronto-based Hydro One reported a 6% drop in net income attributable to common shareholders for the third quarter, to $219 million from $233 million in 2016. Net income year-to-date is down 15.2%, Hydro One said, to $503 million from $593 million. The comparability of third-quarter earnings was negatively impacted by higher consulting costs primarily related to the acquisition of Avista Corporation, higher depreciation expense due to an increase in rate base and increased financing charges primarily due to a higher weighted average long-term debt portfolio as well as the issuance of convertible debentures in August 2017, partially offset by reduced vegetation management costs, said Hydro One, Ontario's largest distributor and transmitter of electricity, in a release. Hydro One reported $18 million in Avista-related advisory expenses for its third quarter, making for $21 million in those costs for the year. As part of the deal, which was announced in July, Hydro One issued approximately $1.5 billion in convertible debentures, which were oversubscribed, the utility said, reflective of the market's confidence in the company's growth strategy. If not for the Avista deal, Hydro One would have seen an improvement in its results. Earnings per share were down, to 37 cents from 39 cents. But adjusted earnings per share, which do not include the Avista costs, were 40 cents for the third quarter, according to Hydro One. The two companies filed applications for regulatory approval of the deal in September. Hydro One said the applications, which were filed with Northwestern U.S. utility commissions and the U.S. Federal Energy Regulatory Commission, are seeking to approve the transaction by August 14, 2018. Spokane, WA-based Avista also filed a preliminary proxy with the U.S. Securities and Exchange Commission in October to begin the process of winning shareholder approval of the deal, Hydro One said. Together with Avista Corporation, Hydro One is currently in the process of responding to data requests from staff from the commissions and various other parties, Hydro One said. Filing of these applications is an important required filings with a number of other agencies will be made in the coming months, including the U.S. Federal Communications Commission, and the Committee on Foreign Investment in the United States. Hydro One has also had its share of growing pains during its transition from a provincially owned utility to a publicly traded company. Executive pay at the company raised eyebrows at Queen's Park, that has led to a regulatory battle over the rights to tax savings generated by the company's initial public offering. Hydro One is arguing that the entirety of a $2.6 billion in estimated future tax savings triggered by the IPO should go to its shareholders, not ratepayers. Hydro One's largest shareholder is still Ontario, despite the province's Liberal government now having sold just over 50% of the company to other investors.